We've seen the stock markets go on a little bit of a bull run to start 2023, but there's a lot of reasons investors might want to be cautious right now, thinking about maybe playing some defense. And there's one stock that I think is really compelling investors might want to be thinking about buying right now, and that's Brookfield Infrastructure. I'm Jason Hall. This is The Smattering, and I've got Tyler Crow on here with me. He knows Brookfield Infrastructure pretty well. He's also a shareholder like me. Hey, Tyler.
How's it going, Jay? You brought me on, but really it's about Jason talking about Brookfield, because Jason knows Brookfield pretty much better than anybody else. He brings me on to kind of riff with him on ones like this one.
I do know Brookfield really well. And if you missed it, friends, go back and look in our channel. We recorded a video where Tyler actually made the bear case for Brookfield Corporation and Brookfield Asset Management. I think it's worth a watch. It's always important to understand that bear case. But Brookfield Infrastructure, again, that's one that Tyler owns, I own. And I think we're both relatively bullish on it for some of the same reasons. But before we talk about that, we get to do these videos because of our partnership with The Motley Fool. And you're looking for great stock ideas, go to our link, fool.com/The Smattering. And The Fool is going to give you some of their best stocks to buy right now. Okay, Tyler, let's talk about what Brookfield Infrastructure is and why it might be interesting for investors to take a look at.
It's one of these simpler businesses that Brookfield runs, or the subsidiary partnerships are a little bit easier to understand. It's that you can see the underlying assets and you get the cash flows from those assets. In the case of Brookfield Infrastructure, those assets are things like midstream pipelines, toll lines, electric transmission lines. They're started to get into data centers, like the big warehouses of servers that are, companies like Google and Facebook have been building, and also leasing out from other companies and things like that. That's the underlying assets that Brookfield owns. And basically at the partnership level, you kind of get a portion of those cash flows paid out in the form of dividends. And it's a very, I guess you'd say, an overly simplified version of that. Of how this business works, but the common theme for all of those businesses is that they're relatively stable revenue generators. Transmission lines tend to move the same amount of electricity all the time. Toll roads, traffic goes up and down, but the traffic patterns are pretty consistent. Things like that make those businesses pretty resilient up and down the market cycles. And so you can pretty reliably count on its existing cash flows to pay out your dividend. And over the past however long that Brookfield Infrastructure has been around, management has been doing a good job of allocating capital to grow that business responsibly enough that it can grow its dividend without over leveraging, issuing too much stock to kind of dilute shareholders' interest or anything like that too much. And so, I think management targets somewhere between like a 5 to 9% distribution growth. Jason, correct me if I'm wrong on that one.
That's right. So high single digits over the long term, they tend to outperform that baseline target, but they have a really modest hurdle that they set as their corporate goal. And I think that's really important because you talked about the stability of the businesses overall, right? They generate seemingly similar cash flows across every economic environment, but they also have ambitions to grow it at a modest rate. But you take that modest rate and you look at it over the long term, and it's done incredibly well in total returns for shareholders without having to be this hyper growth story that so many investors get enamored by.
That, I think, is what, to me, makes it look relatively attractive right now. Like we just said, when you're thinking about the future of Brookfield Infrastructure Partners, you can't think of like these major growth catalysts where you're going to grow like 20, 30% in a given year or anything like that, right? Look at the dividend yield and then that projected growth that we were just talking about. So mid-single digits growth, and at the current yield of 4.5%, that's pretty reasonable, right? We're getting close to somewhere between a 9 to maybe a 12% return on a company or on an investment, and that's pretty good. That's also in part because we're 24% off the recent high. And so,
right.
Maybe when this was a yield of 3% or even less, now all of a sudden that value proposal to me is less attractive, because if I pencil in mid-single digit growth and a 2.9% yield, now I'm looking at like 6 to 9% total return. Not great. So Brookfield is a really good business, but it's one that you have to be a little bit more cognizant of valuation and where you're buying this company, because not all valuations for this company are kind of created equal.